All right, welcome back. 6:20, and it's time to take a look at your money. December is a time when most Americans celebrate the holiday season, and whatever our background, it's often a time of traditions and celebrating with family and friends. But for Wall Street and stock market investors, December has also been one of the most profitable times of the year. Since 1928, the benchmark S&P 500 has generated a positive return for the month of December 73% of the time, the highest of all months. Now, financial advisor Mark Gravicheski joining us now live on Zoom to break this down for us. Good morning, Mark.
Morning, Devin. Good to see you again. Happy Monday.
Yes, happy to be back. Now, tell us a little bit more about the historically strong performance we typically see in December.
December certainly has a long history of delivering holiday cheer to investors. As you just mentioned, since 1928, that's over the course of 97 years. The S&P 500 has generated a positive return in December 73% of the time. Now, since 1928, Devin, the average monthly return we typically see in the S&P 500 is 0.65%. But in December, the average monthly gain jumps to 1.25%, almost twice the monthly average. Now, if you include the Thanksgiving holiday, so from Thanksgiving through December 31st, the average gain is even better at 1.46%. Now, the worst performing month historically has been September, which averages a monthly decline of 1.13%. Since 1928, the worst December performance was in 2018 when the S&P 500 fell 9.18%. Conversely, the best December performance was back in 1991 when the S&P 500 gained a massive 11.2% in just a single month. Now, more recently, the S&P 500 has reported a gain in December in 7 of the last 10 years. Last year, the S&P 500 posted a pretty stellar 4.2 or 4.4% gain in December. So, hopefully we get another strong December this year.
Now, why do you think we see such a strong performance in the stock market during December?
Yeah, there's no scientific rationale as to why the stock market tends to overperform in the month of December. Some Wall Street historians argue, it's kind of that general optimism we typically see that surrounds the holiday season. Others say it's more of a short-term conviction on the retail holiday shopping season, which again are those 61 calendar days in November and December. The retail holiday shopping season is by far the biggest shopping season for all retailers. And since consumer spending, Devin, drives about 2/3 of our total economic growth, one could argue investors are hopeful the retail holiday shopping season could kind of provide some type of spark to the economy and thus drive those future gains in the stock market.
Well, with 2025 just around the corner, does this strength in December tend to carry over into the new year?
Yeah, when you look at the data, Devin, it's kind of interesting. The results are a bit mixed, but certainly don't match that strength of historic December returns. Again, since 1928, the average monthly return in the S&P 500 is 0.65%. Now, in January, that December strength does seem to carry over into January, where the average monthly return is 1.17%. But then that strength, kind of has historically dropped off. In February, the S&P 500 actually averages a decline of 0.9%. While then in March, it kind of falls back in line with the historic average of 0.6%.
All right, thank you, Mark. And also, thank you for dropping off that box of chocolate like you do every year. Yeah, speaking of the season of giving, right? Goes hand in
Hey,
hand.
I hope you guys enjoy them, and same with the control booth. You guys are part of my broader WQAD family, work family, and wish all of you a very Merry Christmas.
You too. You know what news people like, and I'll make sure Andrew shares with us too. All right. All right. We'll see you next Monday. Thanks, Mark.